Hey everyone, and thanks for jumping back into the cryptoverse. This is a premium only video, the weekly roundup. Hopefully you guys enjoy it. We're just going to go through the charts, see where everything stands today. So let's go ahead and jump in. So Bitcoin is doing more or less what we may expect. Okay, I mean we discussed the implications of a bounce off the 100-day SMA. We have gotten that bounce. And as we also have been, discussing the idea that if Bitcoin continues to sort of have these intermediate bounces within the bounce, Ethereum can continue to put in new all-time highs. Okay, Ethereum can stay bullish as long as Bitcoin's not below the 20-week SMA or not back in price discovery mode. And even the prior price discovery modes for Bitcoin weren't even that significant in the grand scheme. I mean, 58K, 61K, and then like 64K. And so Bitcoin's actually coming back down, it looks like, to the 100-day SMA. It's gotten pretty close to it already. The 100-day SMA is at 53,585. You can see we already had a move down to that level a couple days ago when the 100-day SMA was actually a little bit lower, so we didn't quite make it exactly down to that level. But you can see we have, in fact, had the bounce off the 100-day SMA, more or less, a bounce up. And we said, despite... even if Bitcoin doesn't put in a new all-time high in the short term, Ethereum can. Okay, Ethereum can. And this is that Ethereum tsunami we've been discussing for months now. And so this is one of those things that I think a lot of people, hopefully not you guys, but a lot of people I think underestimated what the Ethereum tsunami is capable of doing. To give you guys a little bit of perspective, the Ethereum, the price of Ethereum is up about 90% over the last 17 days. And over the last, say, 48 days, it's up 164%. So it's doing relatively well. Now, you don't need to listen to me to know that Ethereum is fairly overheated. And we said that it's overheated, but that doesn't mean that the tsunami can't take place anyways. Look at these monthly candles. Okay, these are monthly candles right here. You have several green in a row. 1, 2, 3, 4, 5, 6, 7, 8. We're currently in our 8th one. This one was 7.5%, 59.5%, 19.5%, 78%, 8%, 35%, 45%, and now currently we're at 49%. And remember the 2-month candles that we discussed a few weeks ago, this one is 91%, 93%, 95%, and so far this one's already 49%. And we're only about a week and a half or almost 2 weeks into the current 2-month candle. Now, I think it might be worth looking at least the RSI on the monthly time frame, because this is one of the reasons why we know that things are very, very, very far extended. If you look at the monthly RSI, in fact, you can see the last time we were at these levels was back in the summer of 2018, and then before that in in 2017, June of 2017, and then in April of 2017 is when we more or less crossed these levels in the past. And so I've shown you guys a lot of charts that suggest that buying Ethereum in the summer tends to not be the best time to buy Ethereum. So as we get into June, July, and August, the 90-day ROI on Ethereum does not tend to be that great. And it seems like it's playing out pretty much exactly how we might want it to, right? Exactly how we might want it to from a data perspective, right? From sticking to the data. Because the data suggests that, Ethereum can have a major move in January and Q1, and then that sometimes in a bull market, that move can extend through Q2, but that by Q3, Q4, Ethereum starts to go down against Bitcoin, whether Bitcoin's going back into price discovery mode or whether Bitcoin's dumping. A lot of times as you get into the second half of the year, Ethereum doesn't tend to perform quite as well. Okay, and you can see the monthly RSI is currently all the way up here at around 94, 95. It is getting pretty heated, and that's why I think as we get into, say, the middle to the late part of the summer, we're probably going to see this. My guess is we're going to see this calm down some. But in the short term, it still could go up, I would contend. I think that, as I said back in April, I think Ethereum, the move by Ethereum can extend into May and maybe even June. Okay, so let's not discount that. I mean, the move could even go into June, based on historical moves. And you might be like, well, what historical moves are you talking about? Well, if you look at the weekly chart and you look at some of the moves by Ethereum in the past, and actually maybe we should look at the Ethereum Bitcoin moves. look at this one here. So this one started in January, it moved up in March, it came back down in April, and then it sort of capped out in late May. And then from late May until December, it more or less bled. And that was why when we were talking about this here, I said, okay, we have one of two options here. We're either going to go down and then come back up before we get our our late in the year Q4 bleed against Bitcoin, or if we go straight up, I'm guessing that it will have a hard whenever we actually do have that momentum shift, which still could be it still could be weeks away or months away. I kind of expect Ethereum to bleed against Bitcoin once we get into maybe like the later part of the summer, and especially in Q4. Now, on any given day, of course, it can go up. I mean, look at this. This was in Q4 in November, and we went up some. But again, the macro trend was down. So we're sort of using this to gauge, okay, where could we be in say, the entire year of 2021? And to me, it stands to reason that the data of suggesting that the 90-day ROI is not the best if you buy in June, July, and August for Ethereum, I think it's going to play out exactly the same way. I mean, of course, there's going to be some uncertainty in that, but the fact that Ethereum's already pushed to $4,100 and we're in May, if this rally continues and we go to say like 5K or even 6K, continuing to buy at those levels will probably not have the best 90-day ROI. And it would make sense. I mean, we're off a crazy run, and it could be time for it to cool down later this year. And then that would be the time to be loading back up on Bitcoin, or even to be DCing into Ethereum later in the bleed, maybe in like the end of Q4, could be an option. Okay. So again, as we discussed in the last Roundup video, the idea is to dynamically DCA out of this tsunami that we had been waiting for. The first one I was able to get at around 0.0585. Okay, so if you follow me on the alerts channel, you'll know that I sold around 10% of my Ethereum at that level because I kept raising the stop and it just didn't get hit. And so now we're still not even at the point. This was, by the way, corresponding to the 0.6 risk sell. We're not even at 0.7 risk yet. I mean, you can see we're currently at 0.697, but remember, I don't sell it exactly at 0.7. I wait for it to go well past it, then I set a stop, and then I just keep moving the stop up, hoping that it doesn't get hit. Okay, so I'm not imminently about to set another one. I don't like to just market sell them. I like to wait for it to move past it, and then if it gives me enough wiggle room, then I start setting a stop, and then I continue to raise it until it finally does get hit. Okay, so it's the same idea that we discussed last week. The main difference is now we've crossed that 0.6 threshold, and then at some point, maybe we'll hit that 20% threshold, where you might offload a little bit more, and then if we continue going up, maybe this is up 30% up here at around 0.1, and then if we go above that, it could be 40%. So that gives you an idea of where we are in this dynamic DC of Ethereum. And remember, I sold all of it to Bitcoin, except a small amount I sold to Chainlink. I sold to Chainlink because we know the Link Ethereum risk is getting pretty low. Remember, the risk confidence is only a 5, so it has all the rights in the world to test theoretical upper and lower bounds, whereas Bitcoin, we would expect a little bit more so to adhere to the risk levels, and it hasn't gone, Bitcoin hasn't gone to a risk level of 0 or 1 in a really, really long time. Of course, it is possible for coins like Link. We saw Link Bitcoin risk go to 1 last summer and basically get to the top of that theoretical bound because it was only there for like 1 or 2 days before then it crashed. And you can see now the Link risk is getting relatively low. So the same thing applies. If we continue to go up and we get well above 0.7 risk, maybe close to 0.725, somewhere in that ballpark, I'll probably start setting stops for back to Bitcoin, and then maybe also take some to Chainlink, depending on what the risk level is at the time. And it might also depend on what the total crypto market cap risk is at the time as well. Okay, so that hopefully gives you guys an update on Ethereum. Now with Link, it's still doing relatively well against the US dollar. It still looks really relatively bullish against Bitcoin. You guys know that textbook bubble we've talked about, this being the mean, and this being, the reversion to the mean here, and we're back on track, hopefully. And we're above the 20-week SMA, which I think is relatively bullish for Link, and I'm hoping Bitcoin sort of continues this phase where it doesn't do much of anything so that Link can take off like it did last summer and like it did the summer before that. But as we said every single week, Link Ethereum is still very bearish, okay? It's still very bearish. And if you look at it, this would be a log scale. But if you look at it on a linear scale, you can see there's some similarities between Link Bitcoin and then Link ETH, okay? And so I don't know exactly where the bottom is, but my guess is it's going to do something like it did with Bitcoin, and it's going to sort of, ricochet at some point and then hopefully get back on track, and maybe we'll start this move again. Okay, that's what I'm looking for Link ETH. So if you're wondering, is Link bullish against Ethereum? No, it's not. It's below the 20-week SMA. We've been saying that. Link is not bullish against Ethereum. If I had to guess, I would assume Ethereum's going to outperform Link in the short term. The only reason I say that is because I like to bet on momentum. And momentum is hard to beat. And when Ethereum's putting in a new all-time high, basically every single day, it stands to reason that it's more likely that Ethereum's going to keep doing that than Link's going to start gaining ground on it. But that doesn't mean you can't systematically take profits out of Link or out of Ethereum as we go up the risk levels and then put them in Bitcoin, put them in Link to hedge, to sort of offset some of your risk. Because in the same way we converted, or I converted Bitcoin to Ethereum over here, I converted to it at 0.03, at 0.02. I didn't care because the goal was not to just flip it right here. The goal was to wait until this and get a 2x. So in the same way with Link ETH, if you took some profits on Ethereum back to Link a few days ago here, and now it's here. Remember, it was only 10% of the Ethereum, and this is the whole idea behind dynamic DCA. Imagine Ethereum continues to go up, so the Link Ethereum risk metric goes down, and maybe you pick up some more Link here with Ethereum, and then maybe you pick up some a little bit later on right here, and then hopefully at some point we get back on track, and then you sort of just look at this as like, okay, that was the time to move back. That was the time to sort of slowly move back, and recognizing that we don't know exactly where the bottom is, but we recognize that the risk level on Ethereum's going up. And the risk level on Link USD is also pretty high, but the risk level on Link Ether is actually relatively low right now. But at the end of the day, I think that, as I said before, do not underestimate the Ethereum tsunami because it can outperform most people's expectations. That's why I still have the majority of my Ethereum, and I was super heavy Ethereum, more heavy than I was not that long ago. I sold 10%, and since then Ethereum continues to go up. So again, this is the whole idea behind dynamic DCA. I've seen a lot of people just sell everything at some level, but then you're not doing yourself any favors, because then if it continues to go up, then you might have that feeling of missing out. Whereas if you only sold, say, 10% of it, then you still have 90% of your stack, and you just systematically offset a little bit of risk. Okay. Bitcoin is not that far above the 20-week SMA from the current prices. It would only need to drop about 10 or 11% to get there. As we've said before, usually, historically speaking, a cross of the 20-week SMA and the 21-week EMA leads to a test of the 20-week SMA in the not-so-distant future. I'm still expecting that to happen. Of course, it might not. And that's the reason why I sold some Ethereum to Bitcoin. I mean, if I knew for a fact Bitcoin was going to test the 20-week, I would have just sold all the Ethereum to US dollars. But because I don't know, that's why sometimes taking profits back to Bitcoin and increasing your Bitcoin stack is helpful. Now, if you just take profits and buy USD, and you don't include, or you buy stablecoins and you don't include stablecoins in your portfolio, then you are increasing your Bitcoin percentage by offloading some percentage elsewhere, offloading some absolute values of crypto elsewhere. But by selling that crypto directly to Bitcoin, not only are you lowering the percentage of the Bitcoin or of the altcoin or the other coin, you're increasing Bitcoin. So you're basically knocking two birds out with one stone there. And that's why I think, getting some Bitcoin occasionally with some of the DCA sells is worthwhile. You can see my stop limits here. This one from Bitcoin, you can see 1/5. Part of that went to Ethereum, and boy, am I glad it did. And so this was 1/5 of my Bitcoin position. And I sold some of it to stablecoins, some of it to Ethereum. But you can see recently on Ethereum, I took a 1/10 back to Bitcoin. And so I'm not looking to take any more profits on Ethereum back to either Bitcoin or USD until we get to at least the 0.7 risk level. And at that, I'll probably wait until 0.725 and then just start setting some stops. And hopefully we can continue to navigate up that band. Okay. That's where I currently stand, hedging the bets by getting some Bitcoin, but also you can see all the stable coins I bought with all these altcoin surges. These are all, the yellow ones are all going back to stable coins. earning 8 to 9% interest on my stable coins so that I have even more capital to deploy whenever I think it's a less risky time in the market. And yeah, I mean, I think the strategy is working out pretty well so far. So looking at the dashboard, you can see the total crypto market cap risk is at 0.8. It's still relatively high. Obviously, everyone knows that it's high. But anyways, ADA Ether continues to bleed. I would expect it to continue to bleed, to be completely honest. I don't see it turning around until Ethereum is out of this putting in a new all-time high every single day phase. Okay, when Ethereum's in that phase, I would expect the ADA Ether valuation to bleed. However, we know that ADA USD could go up. Okay, so just because ADA USD goes up doesn't mean that ADA Ether is not bleeding. Remember, Ethereum can stay strong against Bitcoin as long as Bitcoin is above the 20-week SMA, if history is any indication, and still Bitcoin is above the 20-week SMA. Okay, still above it by, again, about 10 to 11%. DOT is the only one we haven't covered yet out of the main ones that we normally cover. So DOT continues to sort of just be in this long, maybe reaccumulation phase. I don't know how long it's going to last. Remember this one over here, everyone got bored with it. It lasted for 128 days. So far in this one, DOT has been going sideways for about 90 days. And remember, this one over here was relatively boring, but then once we got to this region, everyone was wishing they bought more. So just keep that in perspective, that accumulation phases or these long movements of sideways action are actually not that bad. They're really not that bad. For new people, I've been getting more and more questions about what if you're new. Remember, for new people in the space, I would always recommend coming with a different strategy and recognizing that, hey, you might need to wait a while before you can feel like you're in a position of strength, okay? Because a lot of times when new people join crypto, they're joining it at like a very heated time, and so then they get really frustrated if in the short term the prices go down. So I would say if you're new, one of the best strategies would be to say just DCA into the market and hope the prices go down so that you can just continue to get more. Because I think for Bitcoin, I like to operate in a somewhat deterministic manner, that it will inevitably go up with time and that we're probably heading to six figures sometime later this cycle, but it's probably not going to happen in the next month or two, okay? Now, remember, we've made some comparisons to Bitcoin back in 2019. Obviously, it's very different, so I don't want to pretend like it's exactly the same thing. But if you look at this type of a move, you can see that there are some similarities between sort of putting in a local top, but instead of going down immediately, it was just sort of a slow bleed back to the 20-week SMA. Now, unfortunately, over here, we did not hold the 20-week SMA, and so I don't want people to necessarily think we have to. Remember, back in 2013, we had a double peak cycle, and we didn't hold the 20-week SMA in the short term. We actually had a weekly close below it, and not just below it. It closed by about 20% below it. Okay, 20% below it. So keep that in mind, that the 20-week SMA is not something that necessarily has to be held as support. For the bull market to start, it has to be held as support. As we discussed, we said, okay, we had the golden cross, which is the 50-day going above the 200-day. We're above the 20-week SMA. The last thing we need is to go back down and test the 20-week SMA before we can really go off to the races. And that's exactly what happened. So now, again, we don't necessarily have to hold it, but if we don't hold it, then the nature of altcoins change. So then altcoins when Bitcoin's below the 20-week SMA, they'll become a lot weaker. And then, depending on how far, if it drops below the 20-week SMA, it could present some timely opportunities on some of your favorite altcoins in the event of some type of scenario like that. Okay, so remember, Bitcoin's been moving up for a long time. We have not tested the 20-week SMA yet. And it's been, from the current, if we look from the last time we really tested it, it's been so far around 231 days. Now, if you go back to 2013 and see how long did we go between, say, a test of it, we could look to say maybe this region, and let's exclude that wick, and you see this one was around 231 days, 238 days. So there continue to be some similarities between the double peak cycle of 2013 and what we're currently seeing today. Note that this one had its local top for Bitcoin in April. Right now, Bitcoin's local top is in April. So again, there are similarities. I'm not saying it's going to play out exactly the same way, but there's similarities in what happened in 2019. There's also similarities in the double peak cycle of 2013. Okay, and remember the 8-week moving average, which is what we were holding as support for a long time, we now have moved below it. Okay, we now have moved below it. And so historically speaking, during 2013, whenever we broke that short-term moving average, we did inevitably go down and test the 20-week SMA. Okay, so that's what I want to make sure we do. And that even happened over here as well. When we got below the 8-week, we then went down and tested the 20-week. We got below the 8-week, we then went down and tested the 20-week. Now we are below the 8-week. It stands to reason that there's a decent probability in the next few weeks we go down and test the 20-week, which is still moving up relatively quickly. And by the way, if you're not familiar with the 20-week SMA, it's currently at almost $49,000. So from the current prices, it would only represent around a $4,000 drop. Hopefully this video has been informative. If you guys like it, let me know in the comments. If you have any questions or suggestions, let me know about that in the comments as well. Thank you guys for tuning in, and I will see you next time. Bye.